Hello and welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today on Follow the Money, we're taking a closer look at the state of the Philippine economy, the challenges, policies, and pressures that are shaping how Filipinos live, spend, and invest. From global conflicts and China's slowdown to inflation, interest rates, and rising debt, how do these factors affect our economic future and what can be done to keep the country on a stable path? And joining us to break it all down is Aaron Say, market consultant at the First Metro Securities Brokerage Corporation. Welcome to Follow the Money, Aaron.
Hi, good afternoon. Thank you for having me here.
Thank you for joining us here on Follow the Money. Now, Aaron, let's start. How would you describe the current state of the Philippine economy now amid global and local challenges?
The Philippine economy so far has been resilient despite the Trump tariff, the geopolitical conflicts and the local political scene, among others. 1Q25 GDP came in lower than expected, although by a small margin. And we hope the election helped lift the economy in the second quarter of 2025, which we'll know later on. Inflation so far has been tame, trending lower at least as of May 2025. And this helped in consumption, which as we know is the biggest part of our GDP, as well as in the policy setting and market setting of borrowing rates. So I think if inflation continues this trend, we could probably see more rate cuts in the future from the BSP, and this expansionary monetary policy could stimulate the economy in the future.
Now, Aaron, you're mentioning that despite these problems that are happening globally and also on the local aspect, how do you think now is our monetary and fiscal policy? Is it enough to protect Filipinos from inflation and a weakening peso, despite you mentioned us being resilient?
Well, they should. Monetary and fiscal policies basically sum up what the government can do to address what needs addressing. Now, of course, there would be some limitations, especially we're a small economy in a small open economy. But if we look at what's happening so far, as far as inflation is concerned, fiscal policies relating to improving the supply chain, especially in food, which again, as we know, is the biggest contributor and it's the biggest part of the consumer basket, among many others, seem to be working, I think. And of course, the downward trend in oil prices was a big help. Moving forward, we trust the BSP to continue doing its job in surveying what could affect inflation and the peso, which we saw the peso depreciating sharply recently, but nevertheless, that as soon as the tension somehow cools, we saw the peso bouncing back, and again the dollar continued its weekend stance. So and of course, as far as the fiscal policy is concerned, we sure hope politics should not get in the way for the government to carry out what is needed to support the economy moving forward. So far so good. I think the mix of monetary and fiscal policy is working to improve the economy. But of course, as we see this political noise, we just hope that this the political disagreements among parties would not get in the way to do what's needed to do.
Now, having mentioned that, how do you think the global conflicts and the China slowdown is really directly affecting our economy?
So far, they're definitely overhangs. So far, they're just that, overhangs. As we know, China is a big producer and a big consumer for most countries. So a slowdown would have a trickle-down effect on the global economy, the Philippines included. But so far, we have not seen any significant yet. We do hope that we will not see it in reality, as far as the China slowdown is concerned. But again, we sure hope that the government in China would do the right policies, or would have the right policies to somehow arrest the risk of China's slowdown being more pronounced or worse than it should be. And as far as the global conflict, especially the Middle East tensions, definitely we have seen already the uptick in oil prices, in all measures of oil prices, the WTI, the Brent, or even the Dubai crude that we have been using as benchmark for our local pump prices. Now we have seen that with the almost 5 pesos, or around 5 pesos increase in diesel last week. But again, as we saw also, we get somehow a reprieve from the ceasefire, and we hope for that to continue moving forward. So I think we have seen this before, and we have seen the reaction of the market, the commodities, and of course the financial market to such events. But again, we really do hope that this would not escalate to a scale and level that would really adversely affect the economy moving forward.
Aaron, now, do you see any key weaknesses in our economy that have been exposed by these recent global shocks?
Well, definitely we're a key importer of oil, and oil is the one of the major, if not the most important input in production. So the increase in oil prices coupled with the depreciation of the peso, as the market, or as the investors fly into safety, really pose a real risk for the economy, for the businesses and consumers alike. So I think this has been the case since we do not have our own, or at least we still continue to be a net importer as far as oil is concerned. But hopefully with the fiscal policies, and of course the development in the energy sector, maybe renewable energy, can somehow lessen the effect of this circumstances in the future.
Now, Aaron, with these effects in the economy, what does this mean to the average Filipino?
Well, definitely, for the average Filipino, if these weaknesses, the higher oil prices and the depreciation of the peso would continue moving forward, then definitely, if you are a commuter, then you most probably see a higher fare. If you're buying in your groceries, most probably, which we are already seeing now, although a little bit tamed at that, definitely your basket, your grocery basket would cost more moving forward. So again, if we are to somehow sum it up, I think the weaknesses that we have been pointing out, hopefully, would be addressed again by the developments in legislation, and of course in industry development as well, as mentioned in the energy sector.
Now, looking at the Build Better More program of the government, is this still viable given our rising debt?
The rising debt, again, should be taken into the context of the size of the economy. So as long as the debt is well within the acceptable debt to GDP ratio, and the GDP is growing, then I think the Build Better More, which basically investing for the future of the Philippines by improving the infrastructure that it badly needs, would still be, I think, a net positive for the economy. Definitely, the Build Better More, or any project that would be needing financing from our government would cause the debt to be higher. But if it continues to be to contribute to the future economic progress of the Philippines, and definitely it should still be made viable, if it's not yet.
Now, can we really realistically invest now in climate action and digitalization while battling poverty and inflation? Where's the balance there?
Yeah, but I would have said that, but again, well, maybe we should really just definitely the priority would be for the greater part of the population. So definitely battling poverty and keeping inflation in check should be, I think, the priority. But we cannot turn a blind eye, on the effect of what we have been doing, in climate, and of course that we cannot fall behind the digitalization effort. No, we definitely need to catch up, no, on those spaces. I think, no, we can leave the basic, no, the battling poverty and inflation to the government, no. But as far as climate action digitalization is concerned, I think the private sector can step in. No, I think there's returns also to be made on this spaces, no, which again should provide some incentive, no, for the private sector to be part, no, of the solution on these spaces.
Now, looking at the SMEs, which comprise a big part of our local business economy here in the Philippines, how are the high global interest rates affecting them? And how does this affect them in terms of access to capital?
Well, as far as access is concerned, local SMEs, I think, have been enjoying, no, good access to capital, no. But of course, this access would be threatened, no, by pressures for interest rates to go higher, which again would cause their borrowing cost to be higher. So far, it has gone higher, no, but not to the extent that we have seen in the recent years, no. So definitely the interest rates now, especially for local SMEs, which are being addressed, no, by local banks, no, and by giving them preferential rates, no, as among others, no, as among other types of borrowers, no. So far they have been enjoying good rates, they have been enjoying good terms, no. But of course, the pressure from the possible increase, no, especially if the benchmark yields, like the US 10 years, climb moving forward, then definitely that could somehow, maybe not the access, the money is still there, no. I think the loan portfolio is still healthy and can accommodate for further loans to this sector, but the interest rates, no, might be somehow a limiting access as far as local SMEs loan is concerned.
But when you look at that, Aaron, is that enough in terms of help to our SMEs, especially now with high costs of utilities?
I think definitely it is a necessary condition. No, of course, financing is at the forefront of it. No, but more than the financing, more than the availability and cost of financing, I think the government, no, can be more supportive of local SMEs by looking at the infrastructure, no, and the processes, no, the maybe benchmarking to global best practices, no, in specific areas that would be more value adding, no, to the economy moving forward.
Where do you think the government should actually focus in terms of helping our local SMEs?
Well, definitely the low hanging fruit, or the obvious industries will definitely those that would be helping us tame inflation, and that would be the food and the food supply chain. If there would be a better farm to market roads, if there would be a better control in the supply, and maybe incentivizing, no, those who are who would like to invest in those areas, no, in the supply chain, no, that could make the food prices more stable, no, not necessarily low, but more stable moving forward. I think those are the sectors that the government should be looking into moving forward.
Now, from local SMEs, now looking to our OFWs, where remittance is one of our our country depends on OFW remittance. But right now, is that model still sustainable given the global trends, especially in automation and migration?
Again, as far as automation and migration is concerned, similar with the discussion earlier, no, this would definitely continue to be an overhang, no. But I think as far as the employment of our OFWs is concerned, especially those who are remitting more, no, more than the others, no, as at the very least, I think they have stable jobs, no, and they are. Most of them actually are residing already in the host countries, no. So I would think remittance moving forward would not be as affected, no, as far as automation and migration is concerned. And as we know, especially for those who are OFWs in countries that are adopting more the automation or the IT related improvements. Now, as we know, our OFWs are employed in those sectors, which I think would give them the competitive advantage against others. In case there would really be attrition from automation, and of course the migration policies are concerned.
Aaron, we're just getting warmed up. Still a lot to discuss, but Follow the Money returns after a short break. You're still watching Follow the Money. Back with us is Aaron Say, market consultant at First Metro Securities Brokerage Corporation, as we continue our conversation on the Philippine economy amid global uncertainty, domestic pressures, and fiscal concerns. Now, Aaron, let's get back to it. Now, looking at the global concerns, if we look back at our economy now, how do you think foreign investors are looking at our economy right now? Are they still looking? Are they still trying to see what happens? A wait and see kind of looking inward in our economy?
Well, I think as far as the foreign investors are concerned, we have to put that into context, no? So, as we have seen, no, the returns to fixed income, especially on the quality fixed income of developed markets, as the U.S., no, as we have seen, the U.S. 10-year yield reaching around 4.6% or even 5% in the previous year, then definitely that would incentivize global investors to put their money in safe havens with that high rates. No, if we look at the rates now, no, especially if we compare our 10-year with their 10-year, I think the incentive nor the premium might not be as attractive as it used to be in the back in the years, back in the previous years. So as far as that is concerned, I think the investors have a lot of choices now aside from the Philippines, but if we're talking about the stock market, I think foreign investors might be starting, at least from what we're seeing in the market recently, have been starting to put their bets. Not big, definitely, but I think they're being selective, on what they can put money in the Philippines stock market, and this I think would be a good sign, although definitely the market or the PSEI would not go anywhere without a huge foreign investors backing, but at least they are more visible now, than in the recent years.
Now, what do you think now should the government do to enable us to become more competitive as compared to our neighbors here in Asia, for the foreign investors to look in our economy and invest here?
Well, definitely, I think there's nothing new under the sun. The infrastructure will definitely be a big concern, for foreign investors. Definitely the investment climate, the regulation, okay? So, and I think the government is doing its part, especially the legislature is doing its part to somehow lessen the gap, maybe not to be better than our ASEAN neighbors, if we are to compare ourselves with, as far as the foreign money is concerned, but at least lessen the gap, the create law, the reduction of corporate income tax, and some other measures, I think are helping. But again, we have to compensate that remaining advantage, from our other neighbors, with again the better services, better investment climate, maybe a better or an easier conduct of business, as far as dealing with government institutions are concerned.
What else do you think should be done in terms of the ease of doing business here in the Philippines?
Well, definitely, I think the the usual problems, no, of again the what I think the common problem for those underinvested sector would be the the uh, the the barrier, no, the barrier that the processes needed
For
in
businesses to come in.
levels of
Yes.
government, yes, in different levels of government that investors should really hurdle, no, before they can get the ball rolling, no. So if this if this style, no, if this style continues to be the case moving forward, then definitely we would not be able to catch up with those economies that have really liberalized and prioritized that the business processes, no, so that the not only the foreign investors but the big local investors would really have more conviction on what they are doing.
Are we still quite behind in terms of digitalization, in terms of making the process faster as part of the ease of doing business here? When, let's say, you're trying to put up a company, getting all these permits and all that, do we still need more?
I think so. No, if we compare what we're doing here with our ASEAN neighbors, no, maybe Vietnam or even other countries, no, I think we are still we have still a long way to go, no, as far as digitalization. And but again, make no mistake, no, I think the government is really moving to the right direction, no? But the pace and the current situation and the current processes and how things are really done on the ground, no, I think cannot still be favorably compared, no, with other ASEAN neighbors.
Now, with regards to our debt levels and our credit ratings, is this something that we should be worried about? Is this also something that's actually holding back some of the foreign investors that would want to come in?
For now, I don't think so. No, credit ratings are usually looking at the not just the debt stock, no, but also the size of the economy. So if the economy is still growing, although again, as mentioned, for 1Q GDP came in lower than expected, no, but still a decent more than 5% growth, no, from the previous year. So if the economy continues to go to grow, no, sorry, no, if the economy continues to grow, even if our debt levels are projected to grow moving forward, I think that would still be on the good side, no, of the credit rating agency, which is evidenced by the recent action of credit ratings agencies, no? So moving forward, if barring any significant policy changes now, especially post-election, I think there's a really good chance that we get a more favorable credit ratings from these agencies, which again should be good for our credibility, no, and hopefully that would trickle down to the cost of financing, no, for the economy as a
Now,
whole.
Aaron, in a world turning inward, now how should the Philippines position itself in the global trade?
Oh, well, that's a tricky question. No, so far I think what has been saving the Philippines is its relatively small position, no, in our relatively small position or role, no, in the global trade. I think, no, I think we can study it for now, no. So far we have been shielded, no, by our small.
Well, you did mention we are,
yeah,
in times
yeah,
of these
relative
crises, we are very
insignificance.
resilient. Yeah.
Yeah, relative insignificance from the global trade scene, no. But if we move forward with improving our position in the global trade, I think there should be some compensatory measures, no, especially if it would expose us from a lot of risk from the currency, from sensitivities to our major trading partners, no. But for now, I think being strong domestically has been working for us for a long time. Now, if we can improve on that before we look outside, I think that would be a better strategy.
Okay. Now, Aaron, let's go to our rapid fire questions. Just answer yes or no. No need to
Okay.
explain your answer. Let's start with, is the Philippine economy acting like it's on a roller coaster, fun to watch but scary to hold on to? Yes or no?
Yes.
Do you think our peso is playing hard to get when it comes to stability? Yes or no?
Can you repeat that? Sorry.
Do you think our peso is playing hard to get when it comes to stability? Yes or no?
No.
Okay, if inflation accelerates, will you hide snacks just to save money? Yes or no?
No.
Is the Build Better More plan secretly a sugar daddy for our debt? Yes or no?
Yes.
Is borrowing money from friends easier than understanding government debt?
No.
Okay. Is your love life more complicated than the national budget? Yes or no?
No.
Complete the sentence. Money is the root of all.
Progress.
Yeah, that's nice. Okay, Aaron, thank you for joining us. Your insights and your expertise on our economy and how our viewers can help themselves in terms of how to follow the money, grow their money, our SMEs and our government alike, so that we will get back on track. Thank you for your insights.
Yeah, thank you, Robert. Nice being here.
Okay, thank you, Aaron Say, market consultant at the First Metro Securities Brokerage Corporation, for joining us on Follow the Money. Your insights on the state of the economy, inflation, global risks, and the viability of our fiscal strategies help shed light on the bigger picture and what it all means for Filipinos navigating these challenging times. And before we go, here's an eye-opener from Bangko Sentral Deputy Governor Zeno Ronald Abenoja. Trade shocks are more damaging than supply shocks. Left unchecked, they can erode decades of hard-won progress. And that's it for today's edition of Follow the Money. I'm Robert Tan. Thanks for watching. Keep it here on BNC, the Bilyonaryo News Channel.